even though it's late, you'll at least get the second half of this. Okay, yeah, exactly. Exactly. Sell side liquidity, that's the exact term I'm looking for. Okay, so sell side liquidity. So if you have a 1, 2, 3, 4, 5 week base, right? And this price shoves underneath, anybody that was long during this entire 5 week period, okay, anyone that was long, they most likely have their stop sitting right underneath the bottom. And anybody that wants to go short that wasn't short from here, they most likely have a short entry sitting underneath the bottom. And also anyone that was like I said, anyone that was long, they probably have that stop sitting there. So they're going to sell when that price shoves down like that, right? They're going to sell. Like people who are long, they're going to sell. And people who are short or wanted to go short, they're going to go short into this, okay? And then when this price reverses like this, it does so violently and quickly on purpose. That's the goal. It does it violently because now anybody that went short from here during this whole period, anyone that's short here, they are trapped. They're trapped now. They can't get out of that position without covering at a loss. Okay? So longs are stopped, shorts are baited. Now they're trapped in this gap. They are trapped in this range. Now look what happens as we go forward in time. Okay? Let's go forward in time. Notice that price never comes back down here. Never. It doesn't ever come back down here. And it's done like that on purpose because they're causing them to capitulate. Anyone who took that big short at the bottom, they're stuck. They have to cover. Okay? They have to. So when that price is consolidating like this along this line, one, you already know BFI has a position here. They showed you their hand. They showed you their hand when they did this move. Okay? So when I'm yelling at you guys for like 5-6 weeks straight earlier this year, telling you to go long here, like, hey, watch this long, and then it finally hits and I take the entry, there's a reason why, because this whole high time frame structure is screaming at me. And it should be screaming at you too. Because structurally, it's set up in a way where they are loading that price up. They're loading it up before a big move occurs. Okay? So, and then they do the exact same thing here too. The same thing they did. Look, these tricks repeat over and over and over again. And they're very clear on high time frames. Look, anyone that went short at this point and anyone that went long during this whole time period, right? Where did they probably have their stop? They probably got their stop sitting underneath these lows here. So when that price sweeps right here, that's that final bait, that final liquidity grab before it makes that big move. We just did the exact same thing 2 weeks ago or a week ago, or whatever it was on Apple. When I made this call on Apple, guys, it's the same thing. Look, it's the same exact thing. It's not. When I made this call, look what's happening. I know that BFI has a position here, right? You guys with me? I know they have a position here because of this, right? You guys follow me? Same idea, slightly lower time frame though. Okay? You guys with me? You guys see what I'm looking at here? I'm talking about this here, right? So you have this BFI move, right? It makes this big move. All right. I know they have a position there. I know they do. Now, when and where are they going to protect that position? All right. So it comes up, it double tops, boom, boom, sell, sell. Okay, it comes back down here and it consolidates along this level. So all the people that have gone long during this period, where do they probably have their stop? They probably have it right underneath these wicks, right? So, and anyone who wants to go short, they probably have their entry. If they didn't take it here, they have their entry here. So when that price sweeps and I tell you guys to go long Apple here, that's the same reason why. It's the same thing. You guys see, I'm not doing anything different. It's the same setup over and over and over and over and over and over again. This thing happens on high and low time frames. It happens intraday. It happens on 4-hour time frames. It happens on weekly, monthly, etc. And the quality of that trade is largely dependent on the time frame. Because like this Tesla trade, for example, I'll just go back to it, right? Like this Apple trade was good. We took this up and made a move, and that's great. But like this Tesla trade occurred on a very, very high time frame, the same like the cat trade, right? So when this setup is developing here back during this time, right, and you're getting this large consolidation, or I should probably go weekly, right? Go weekly. When you're getting this large consolidation here, right, that is a high time frame setup, very, very high time frame. So when you get that final sweep here, when I'm telling you guys to take the entry, when this price, let me put a line up. When this price sweeps here like this, when it goes underneath these lows and that volume goes up as the price goes down, and we get that sweep that takes place here underneath like this, right? And that volume starts spiking up, that's most likely the final fake out move before the big move. There's almost always a fake move before the real one. You should put that one in your notes. Like it doesn't happen every time. That's why we take pilots. But most of the time, there is a fake move right before the real move starts, and that comes in the form of a liquidity sweep. That's why this trade was so potent, because look how long it consolidated. It's the same thing with the cat trade. It's the same thing with the Microsoft trade. It's the same thing with the Apple trade earlier this year. Remember this? Remember this? 170 guys go long by a monthly contract. It's because it's the same thing. I already know they got a position because they got it here. They got their position here. So when it comes back and it starts consolidating along this line here, and it does, look, same thing. It's consolidating along this 170 line. It does a liquidity sweep, and then that's the final move before it takes off to the moon. It's done so like that on purpose. You guys following me? You guys following exactly what I'm saying here? Do you have make sure that you're understanding what I'm putting down right now? It's okay. I started recording like 10 minutes ago, so you'll be able to rewatch at least the last 10 minutes of what I've been discussing, since I didn't start the recording at the beginning. But I'm still reiterating a lot of what I went over from the start, anyways. So sell side liquidity. Okay, let me see. Sell side liquidity and liquidity sweep, two different things. No, they're not two different things. It's just a description of what the type of liquidity it is, Chris. So you have buy side liquidity that sits above the high, and you have sell side liquidity that sits below the low. So liquidity is just a general term. Sell side or buy side describes the type. You got me? All right, good, my man. Oh, I see. Steven clarified it. Okay, cool. Yeah. So. Oh yeah. Yeah. Okay, good. Good. So those like these again, like these high time frame signals. That's I again, like I said, I can't emphasize it enough. Spending time on these high time frames. I know you as a natural way of being, and you're not alone on this. The common retail trader seeks to be so precise that they typically end up missing. They try to catch every little micro move, and then they miss out on the big move. Okay? When you spend time on the weekly and the monthly, you will just simply learn a lot about where BFI are positioned. It's going to tell you where they're positioned at. Okay? And then you can anticipate that they're going to add and protect that position. That is why the first retest of a BFI footprint is so damn potent, because not only are they adding and protecting their position, but when that buy side order is initiated, the sell side orders have already been weakened. So the second entry, or the second entry of that price point, is most likely going to have an end result of a higher high. You guys with me on that? I can repeat it if necessary. You guys follow what I just said? Because that's an important key takeaway. I can reiterate it if necessary. You guys, just give you a second just to make sure that you understood what I just said there. No problem. No problem. All right. I can, and this is, this ties into the BFI crash course, but this is a little bit more detailed explanation. Okay. When BFI takes a position, okay, when they take a position, we'll use this chart. We'll use this chart. Okay, this is fine. When they take a position, you know what? This one had earnings involved here. I'm gonna use one that didn't. Okay, actually, this is perfect. We'll use AMD because this didn't have any earnings involved in it. Okay, this is just pure price action. All right. I know that BFI took a position here. I know they did. Okay, I know they took a position there, and I knew that the 130 level was key. Let's go back to a daily so you can see it more clearly. Okay, I know that the 130 level was key because of how they consolidated this price here. Okay, so this is what I would consider as BFI zone. I don't have it drawn up right now, but like this would be, say, a zone like so, right? This would be a zone like that, right? All right. Now I know that they took a position there based on what happened there. Okay, I know that. So the first retest of that zone, of that footprint, is most likely going to print a higher high. Why? Because the sell side orders, which are sitting up here, have already been weakened. So there's less for it to push against when it comes back to test that price. Most of the time, if BFI has taken an initial position and you get a retest of that origin, this is the origin right here. When you get that retest of that origin, it will most likely print a higher high if you hold it long enough. Because the sell side orders are weak. There's less for it to fight against. So when it comes back, it's more likely that it's going to push through it because BFI are trying to push that price away from their entry. They don't want that price getting close to their entry. They want it to get away from it. They want to get enough size that it's meaningful, but they don't want that price getting close to it, because if you get a bunch of people on the opposite side of that, right, it would start to threaten their positioning, where this price could, do something like this, right? Where it could go like that, and they don't want that. So they're going to add and protect that position and push it away from where their entry is. Okay? That's the whole game. They're trying to protect their positioning. Okay? Yes, John, exactly. Yes. I'm on the daily right now. But thank you, Stephen. Appreciate you. Um, it looks like a massive. I feel like I missed a question. Can you explain why the candle sequence a BFI zone? What? Can you fix that sentence? Talking to you, Ital. Can you fix that sentence so it's a little more clear for me? The last part, the origin is what I didn't understand. Oh, why is it a BFI? I can answer the first part while you fix the question. Why is it a BFI zone? Okay. All right. So let's go back in time here a little bit. Let's look at what's happening here on the chart. Let's forget that side. Okay. Let's focus here, and this is gonna help you understand. Let's go again. Here we go. High time frames. Here we go. This is gonna help you understand. All right. Let's go back in time. 2022, 2020, or 2021, 2022, 2023. Let's focus on what's happened here. This was the prior all-time. This was the prior high here. Or sorry, this is not the highest. This was the high during the June rally of 23. This was the all-time high up here at the 160 mark. Okay. All right. This was in a long downtrend, and then they finally decided to mark this thing up from protecting their positioning here. I actually remember this trade. We were on this one. They closed this price over this high here. They closed it over this high. Okay. They pushed it up. There was some liquidity up here. It came back and retested this price twice, once here and once here. And it really retested right there, right? And then what did BFI do from there? They continued to mark this thing up. Now, BFI has a position here. I know they have a position here because they decided to break, hold, close over this high. They have to have a position there because this price cannot move beyond this level until they have taken a position. Period. So my anticipation is when that price comes back and maybe threatens their positioning like it did here. Actually, we took this play here. We took it here and we took it there. But when this price comes back and threatens their positioning, notice what they did here, right? Now they brought it back down and they swept that liquidity, but only very momentarily during that market crash. So I know they got a position here because they broke it out here. So it's likely that they're going to add and protect that position, okay? Just like they did here. This was the first retest of that origin from back in January of this year, okay? That was the first retest. And notice what happened. High volume sweep and then pivot the other way. So when it comes back again, now let's go back to smaller time frame to see what they're up to, right? Look at what they did here. Let's remove this so it's easier to see. Look at what they did here. Let's put this on so you can see it more clearly. Where the liquidity is. Let's focus and see what, let it adjust. Give it a second. Okay. All right. That's what we want. All right. So notice what's happening here. They stuffed it on volume here, and then we start getting this liquidity, this high volume action taking place down here. So they stuffed it here. It came back. They protected their entry, pushed it up, and then took it for a trend. We took this trade in early August. Okay, so when it comes back, again, this was the final price right here. This was the final move, if you will, that took this to that high. So if I know they got a positioning down here, they're probably going to protect. So when I start getting a signal again, it's likely that this is going to push up to a higher high. So I know they have a position there. So I actually had Ali, who's in the group with us, I told him to exercise those 130 calls, which he did, because it's likely that they have a position that I can see that they have a position at least at 130. So though my positioning, which I did too at 130, is protected by their positioning. Their entry protects my entry. I'm just trying to enter at the same time they are. So, and that's what I was saying when it prints like that. All right, I got a sell side order there, but when it comes back, these orders have now been weakened. If there was, let's just call it small numbers for now. If there was 1,000 orders here on the first touch, right? After that first move, okay, maybe there's only 300 orders left on the sell side, and now there's maybe 1,500 orders on the buy side. So when it comes up again, it just shoves right through it because there's not enough resistance to hold it back. The BFI entry is more powerful. The BFI entry is more powerful than anything else in the entire market. The entry. And that's largely in part of the way that markets are structured. They're structured to be long. So when BFI takes an entry, you better pay attention to it. To put it simply, you better pay attention, because when that price comes back to it, the second that, or the first retest, the second touch of that price, that first retest is likely going to be an even better move than the first touch. That's the cool part. So even if you feel like you may have missed a move, like look, you could have missed this whole move if you simply just waited and had the patience for that price to come back. You would have got a better move. You could have went 130, 133 to 174. And whereas this move here was a 130 to 160. You see what I'm saying? So the retest of the B, that's why I'm waiting for this Microsoft play. If this price comes back down under here, under 407, and gets literally anywhere down here, I'm going long, because I'm anticipating that if it does happen, this price will likely print a higher high than what it did right here. It's likely. And I'm very confident in that move because I look at the market on high time frames. So look at what's happened on a high time frame on Microsoft. This entire year, it has not closed one time, not once has it closed a weekly bar under the 400 level. It hasn't happened. They're protecting that position. So if this price comes back down under here in this zone, I'm hitting this because I know that BFI has a position here. I know they do. I can see that where they marked it up here, where they marked it up, came back, retested, they bounced it higher, came back, retested, bounced it higher, came back, retested, bounced it, retested, bounced, over and over again. So I'm not afraid. When another part of that too is I had the 400 calls from August, which I exercised. I'm not afraid of having a position in equity on Microsoft at 400 because I can see that BFI has one too. You guys follow me? I'm not afraid to take a massive position, even though it's way up here, which people may consider to be high, right? I can see they have a position there. So it's okay for me to take an entry there. I'm cool. You see what I'm saying? Because I can see that they have a position. They pushed it up over the prior high. They stuffed it over that high. And then they had another consolidation range over here. and they shoved it over that last high and even retested it once too for good measure. So you see what I'm saying? So I'm not worried about that positioning. When it comes back and it prints a signal, I know it's go time. When that price comes under and it prints that 15-minute pin bar with volume, it's time to go. It's time to hit the button, because I'm looking at the market on high time frames. It gives me the confidence, because on the high time frame, it's really, really, really easy to see where they're positioned. You can see it. It's clear as day. As long as you have a basic understanding of how to read these candles, it's very clear. Yeah, that's actually a good homework assignment. I would love it if you guys did that. I would love it if you guys did pick 3 stocks that we don't trade regularly and explain to me in detail where BFI is positioned and what's likely to happen. I would love it if you did that, and how you would structure your entry and all that. That would be a great homework assignment for backtesting purposes. Pick 3 stocks that are not on this list and talk to me about them. Post it in the general chat. That'd be a great homework assignment, especially for the new guys. That's what you guys should be doing. You should be using these Sunday sessions to learn and say, you know what, cool. Now let me take this and apply it. And drug. Yeah, it's a great example though. It's funny because the guy wanted to short, right? It's funny because he doesn't understand. He doesn't understand what that means. When that BFI footprint printed on drug last week, was it last week or was it last week or the week before? Whatever, it doesn't matter. Within the last 10 days, when that footprint printed, that's not the time to short. They mean business. I would not bet against that. It's a bad idea. Yeah, he thought he got torched. Yeah, he got torched. Yes. Yeah, I mean, you can pick S&P 500 stocks, Yeah, just pick any that's not on this list, because we talk about these and you already have levels and all that. Yeah, and he doesn't understand what that means. And now you have another BFI footprint on that same stock, you know. And you know what? There's idiots that are going to try to short that. And it's like all right, it's good luck. I don't even need to know anything about the company, like what's happening, because when you see that, it's a bad idea to go against it, man. I'm telling you, it is a bad idea. All right, now let me go back to this question. What are the signs that BFI are moving their positioning? The best sign is breaking the monthly zone. That's the best sign. Breaking the monthly zone. That's it. Simple as that. A single answer. Single answer. Breaking the monthly zone. Whenever they want. Whenever they decide to. Yeah. When the monthly zone breaks, I'll tell you like this, Atal. Monthly zones don't really break that often. It's rare. It's very, very rare. Okay? When it does happen, it's a big deal. Because either A, depending on which direction it's going, A, they've decided to release their position and sell, or B, they've decided to add to their position and buy, and they're probably about to buy in a very, very big way that most people are probably not even prepared for. They can't even imagine how far that chart's going to run. They can't even fathom what's about to happen. So breaking monthly charts, it's a big fucking deal. You can look at this chart right here. Look. I mean, just Microsoft. Look. Here. Let's go monthly. Okay. Look what happened here. We had this all-time high back here. You had this sell side zone, right? Which was respected. It never closed beyond it. But when it finally did here, when it finally shoved, look what happened. It went from what was this? This is 340 was the top of that prior high. So 340 and it ran to 470. Even if you waited the whole damn month for that candle to close because you were too chicken to take the entry, you still could have caught another 100 points. You see what I'm saying? So when monthly zones break, it's a huge deal. It's a huge deal. So no different than what happened here, where I said that they're protecting their position at the 400 level. You had this very small wick here at the top, and they consolidated it for 4 weeks. But look what happened when it broke that. What's that, 383? When they broke that 383, it just kept running for another 80 points. So, yeah, monthly zones that's a big deal. It's a big deal. So, yeah, monthly zones are, you want to pay attention. It's no different like Steven was asking about LMT earlier. Like, look what happened here. You had these zones, these sell side zones here, right? And then look what happened when it finally broke out. It's a big deal. Big deal. Meta, it's another one, you know. I mean, that thing has just been on a tear now for 2 years. Just just going. But, it finally broke that all-time high. But look at it. Here's the key. Look how aggressive when it finally broke this all-time high. Even if you had missed this first part, this whole move, you could have missed this entire move. The most aggressive candle occurred after the all-time high breakout. Like, look at that. Like, look at this, man. Nvidia, Costco, all of them. You break these monthly zones, especially like on the supply side. Remember, like I said, the BFI entry is the most powerful. So when supply side zones break on the monthly, you better watch out. You better watch out because, like, look, you could have missed all of this Costco move. The biggest part of the Costco move occurred after the 2022 breakout, which is slightly sickening. So, yeah, monthly zones though. That's the key. That's the big key there. Monthly zones. Because if they're not, remember, like I said, the beginning of this, BFI are only doing one of two things. They're either buying or they're selling. That's it. There is no, I'm not going to buy now, I'm not going to sell. No, that doesn't exist in their world. So they're doing one or the other. So if they're selling, that's a big deal. And they're going to break a monthly zone. That means that stock, they have a negative outlook for the future for it. But if they're breaking a sell side zone, a supply side zone, and they're buying into it, not only are they protecting their position, but they're adding to it in a big way because they anticipate that stock to continue higher. Straight up. It's funny, but it's true. That's funny, but it's true. Because if you try to fight it, it's just a bad idea. You're gonna lose that fight. this was good though. These are good questions tonight. I'm glad that we could go over this stuff. Some things we've gone over before, but just reiterating with a little more detail too. So. Yeah, no problem. Yeah. Yeah, and by the way, Steven, I still haven't received a response from the carrier yet on that shipment. So I'll let you know how that goes too. Yeah, I don't know. These Ukrainians, Russians, they're on Ukraine Russian time. So I'll just wait until they get back. It doesn't have to pull back. I would like it if it did, Chris. I would like it if it did, but we're gonna see. We're gonna see what we're gonna see what happens. As usual, I'm gonna look for the best entry I possibly can get. I have some ideas of where I want to look on SPY for another entry like we did a week ago, right? Like I like this gap right here. This is interesting to me. I like this retest here. It's more reactive because again, unfortunately, we don't have any supply side zone. We don't have one. So all I have is the demand side. So all I can do is like what I did here, Chris, when I told you guys to take the entry here at 567. All I can do is work with what I've got. So all I've got is just I have this gap to sweep that, and I have this right here. I feel like honestly a 576, I mean that's really far away now. So I doubt it would even get that far. So really I'm just looking here and here for a retest and just see what happens because we have all these earnings and positive catalysts that are coming up, and it's likely going to it's probably going to go, man. It's probably just going to keep going, dude. Like for real. It's probably just going to keep going. So there may be some slight hesitation before the election, maybe, but the way this month has been going, yeah, I doubt it. I got the whole earnings chart printed in the trade idea section for you to review if you want to see who's printing what and when. I wasn't on voice earlier. Yeah, I want you to be you're going to be paying attention to SPY, Apple, Amazon for the week. Apple will be a good sympathy to SPY, and yeah, those three they're gonna have action. Most likely I'm gonna just have you guys in SPY for the week. That's probably what's gonna happen because I doubt that there's gonna be any major upsets this week. It's just unlikely. It's unlikely that occurs. So, and then the other two trades that I'm already in, they're a little too big for. They're just too big for what I want you guys to do right now because they cost too much per contract. So you can just ignore those two. Thank you, sir. Yeah, I appreciate it. Yeah, I don't mind going over on time if the questions are good. As long as I'm not sitting here just wasting time. About option layers in a long trade. What do you mean option layers? Options layer. What do you mean by that exactly? Oh, the time decay. I don't worry too much about the theta because I'm trading at the money. So that's the whole trick of trading close to the money at all, is because once your contract is in the money, you're not going to be getting hammered over the head with the theta like you would on an out the money contract. That's the whole trick, being able to get into it. You can't. It's hard. It's hard to make a comparison with options with futures because futures have a fixed amount. There's no Greeks. Yeah, what Steven said. Yeah, so you can't really. They're not. They're not. I mean, kinda comparable. They're both derivatives, but they're not. They're both derivatives, but they function. They're different tools. I mean, that's it. They're different tools. Futures are fixed. Options are variable. That's the biggest difference there. Yeah. Yeah, it's true. Yeah. Yeah. Different mark, different tool. So, yeah, they're just different. That's it. They both have their purpose though. So, yeah, options are different in that regard. Yeah, futures are, yeah, they're just different. Different game. I trade futures though. I mean, um see videos of actual trades with options time decay. I'll be honest with you, man. I'm gonna tell you this again. I think you're really focusing a lot on the Greeks, or kind of worried about how the Greeks are gonna impact your trade. But I'm telling you, what you really need to just focus on is trading close to the money, and you're not gonna, as long as you're trading close to the money and you're not buying high IV contracts and you're directionally correct, you're probably gonna be fine. Like that's it. I I wouldn't focus too much on that. I can tell that it's like kind of like a little bit of a mystery to you in a way, or you're trying to like kind of pin it down, like what, like the risk parameters. But ultimately, as long as you're, that's why I tell you guys to trade at the money, because yeah, no, you're overcomplicating something, is something that's relatively simple though. Relatively simple. Yeah, don't overcomplicate it. Yeah, I'm telling you, don't overcomplicate it. Just trade close to the money, like keep your strike tight until you really learn the game, and then you could you could dabble with a little bit farther strikes only in certain scenarios. But As long as you're trading like a strike that's like right there, that's really that's gonna eliminate all your problems with Greeks. How about that? That's the biggest key there, and everyone in here can vouch for that. Like, if because it's when you start trading, as long as you're trading a strike that's close to the money or at the money, it's gonna eliminate all your problems with the Greeks. Like 90% of them. 90% of issues with Greeks. The issues you have with Greeks start that where it comes in is where you start trading deep out of the money strikes. That's where you get fucked. Like that, plain and simple. When you trade deep out of the money strikes, that's where you have issues. Yeah. But if you're trading at the money or close to it and you're directionally correct, you're fine. You'll be fine. Yeah. The only time where you start experiencing a position that's a problem, like even if you're at the only time where you experience a position that has an issue Greek wise, when you're at the money, it's and it's just not, it's moving in your favor, but it's not doing it fast enough, and you're gonna take a slight paper cut on that. That like kind of like Exxon, we were in it for 10 days and it just didn't move fast enough. It was just freaking not moving. 3 points in freaking 10 days. It didn't do shit. So we started losing on the Greeks side of things because it was too slow. But you're not, as you notice, you're not at risk for a giant, you're not at risk for a giant loss on it because we still had time, and two, the strike was in the money at that point. Yeah. That's exactly, yeah, that's the exact situation. The only type of situation what you're going to be in where you have an issue where, I mean, you can even examine that, what that looked like in terms of risk reward or how much it was taken away from you despite the delta move. Yeah. But yeah, like for the most part, the main thing for day trading, to use 0 and 1. I use both. It just depends on the setup, John. Lately, I've been using a lot of 1 DTEs because I've actually, so like I went through many series this year with zeros, dozens and dozens of series, and I'm actually making more right now with 1 DTEs because a lot of times I'm directionally right, but the Greeks on the zeros mess up my trade because the theta and everything and the IV contracting as the clock gets close. And but the ones, I can just sit in them the whole day and just ride a trend, no problem, without worrying about it doing it now. So I can just sit in it and use a little. And so instead of getting more leverage, because the zeros have more leverage, instead of focusing on leverage, I just use a little bit more size, and I'm actually making more money because I'm catching more of the move. So 1 DTE has been my go-to as of late for day trading. Yeah. Yeah, all good. Yeah, you guys had good questions. So, like I said, I didn't mind staying on. I don't like it when we're just sitting here, just kind of wasting time, just being slow. If it's rapid pace, go go go, cool. You know, I don't mind that. If you guys are engaged, I'm engaged. If you're not engaged, I'm disengaging. That's it. The chart up now. Can I answer questions? Yeah. So it depends on the time frame you want to focus on, right? So right now I'm on like a 1 hour, right? And I'm looking at this whole thing. But really, the point of control is here. That's the main one. Where we took this long, this is the one that really matters in terms of directional, right? Like what my anticipation of direction is. This is the one that matters. So when we took this long down here, you guys were, I think, I don't think you were on this one. I know John was, and Abram took his first live trade here. But this is the one that matters for me in terms of direction. And then from there, I'm looking for other entries to get into. So then I'm looking at smaller time frames like this, right? So what matters to me at this point right now is I have this here. I have this here. This one is key for me. This one is interesting to me. And then on the supply side here, because I had a sell side order that took place there. So buy, sell. So that's what I'm paying attention to. But ultimately, the one that really matters in terms of direction is this one down here. This is the one that matters. Because when price leaves a long consolidation period like this, the direction that it moves away from that point of control, it's most likely going to continue in that direction for quite some time. Which it has been, obviously. You notice I haven't been calling any shorts. It's for that reason. I've been continuously just looking long. Trying to go long, buy long here. That's it. That's all I've been doing. Like, yeah, some shorts have occurred during this trend, but being long on that trend, it's likely that it's just going to be an easier trade to get into and to hold by positioning yourself appropriately in line with the order flow. It doesn't have a supply side yet. Yeah, it doesn't have one yet. It's at all-time high. There is no supply yet. Not in terms of like a BFI zone. Yeah, it's just a micro zone though. It's not a BFI zone. Yeah, it's a micro. Micros don't. I mean, like they have significance, but they're not. Like it's kind of like this. It's all like we had a micro zone here, right? Remember we did this short. This was actually one of the first trades you were engaged in this group. We had a micro zone up here, right? We went short here or here, one of the two. I think it was here. We started short in this range and sold it down here, but we had a micro zone, but it's not a BFI zone though. It's not big enough. It's not a big enough move. Yeah, so yeah, it's just a micro like this right here. Yeah, go here. Like this range. Here, I'll show you. Like this. Let me move this thing. If I could get the damn thing. Like this little micro. It's just a micro like that. Like that would be the micro. But it's not a BFI zone. The reason it's not a BFI zone is because a BFI footprint hasn't printed there. Correct. Correct. Yes, sir. You can't understand BFI until you zoom out. That's right. That's why I say you need to spend time on the weekly and monthly time frame. Correct. If you want to understand how they're positioned. Yeah. There's a minimum amount of time that is recommended for viewing a POC on a given time. Is that a question, Steven? Okay. And the DBR is more callable when it does a monthly breakdown. What do you mean breakdown? What is that? What do you mean by that? What do you mean by breakdown? What does that mean? Oh, yeah. Yeah, if price breaks and is closing past a monthly zone and point of control, that's probably going to continue down for a long time if that happens to any stock. Yeah, if you ever see that, that's most likely because something terrible happened. Like it has to be bad for that to occur, like really bad. For it to continue. Remember what I said about like bad things happening? It's like to what degree, right? So like you can have a bad catalyst. Yeah, yes it is. It is easier to call. Yep. Okay, here you go. You weren't in here for this. This was like right before you got in here. But on this Nike, remember what I said about high time frames? This was a no-brainer trade for me. This I don't have to think about this one. It sweeped all these lows here. It had a pretty nasty catalyst, and then look what it did. Remember, I only had this at the time, and I made this call on Nike here. We didn't have those green bars. All we had was this, right? So what is this structure? It's a massive drop, liquidity sweep, basing on high time frame weekly. I got a point of control there at that time point too. At that time, I had a big volume, lots of liquidity, go long. That's it. It's easy. Especially, I should also mention one more point of confluence is stocks that have traded towards COVID lows. If you look at any of the big names that have gone towards that price, it's just been a great spot to enter regardless, all for the last like 2 years. So I don't think Nike's gonna become insolvent or something like that. So when I saw the signal on the high time frame, it just made sense to me to take a massive equity position there. I mean, it's Nike, like it's Nike. It's probably a good move. Yeah. Yeah, you get a drop base rally on a weekly time or drop base setup on a weekly time frame with a point of control, it's time to go long. On a good name like that, yeah, you need to do that move. Yeah, like look at what happened here in terms of positioning. You can see where they put the size on. You can tell too, like when you have those big moves, like I mean this is really aggressive, but you have those big moves and then that price runs flat. I mean, John, this is the same thing I do every day on the 15-minute. Like if you saw this chart like this, you've been trading long enough with me now to know. You've seen me do this. When you see this chart, a chart that looks like this on a 15-minute time frame, you know what time it is. You know what time it is. you know, it's time to go long. That's it. It's simple as that. Like it's just, yeah, buy. Buy. That's it. That's it. And then when it starts to move like that and it breaks that trend, buy more. That's what I've been doing. Buy more, buy some more on the retrace of the 50% mark of the bullish engulfing candle and keep buying. Because you know what? BFI's long and they're probably going to stay long. I already know they're long. I see their order. It's based on what you guys know, what you've learned from me so far, I see their order. They've already added and protected it twice. They're probably going to keep doing 3 times actually. Sorry, 3 times. They added and protected their position during this whole phase. They're probably going to keep doing that. Yeah, 50% of the bullish engulfing candle. Yeah. That's a standard algorithmic retrace. It works both directions too, by the way. 50% of a bearish engulfing candle. It goes both ways. Good catch there. Yeah, because I didn't highlight that. Yeah, that's one of my classic entries. I gave that entry, one of those actually last week on SPY. It's an intraday move. Right here. This one. Bullish engulfing. And I just told everyone, I said, hey, just take an entry at the 50% mark right there, like that. Nothing too complex. And you see how that worked out. Nice and simple. Your brain, anytime you see that print like that, you should immediately just put an order right at the 50% mark. That's it. And that's exactly what I did. Just put an order right there, right in the middle of the candle. Yeah. Yeah, 50% of the bullish or bearish engulfing candle, ideally in line with the trend that's already been established. You know. Yeah. Yeah, it's just a classic move there. Classic algorithmic entry. Yeah, I recorded this too, so or at least the second half of it. So I'll upload it to YouTube so you guys can use it to review, because this will be a good review video for you guys, for sure. Yeah. Good questions tonight, though. I appreciate the engagement. Makes it easy for me to do it too, when you guys are very engaged like that. I think we probably pretty good then. That's good. Yeah, I think you guys ready for the week. I'll put some levels up too of what I'm looking at for Apple, Amazon as well. But man, these two look, man, they look ready, man. Amazon looks like it's ready to. I love Amazon. I love that stock. Oh man, I love it if you put some homework together. Please do. Please do. It's good. It's only good for you. Put the homework together. Send it to me. I'll grade it. Yeah. Put it together. You know what to do now. And don't be afraid of making mistakes. Just say, this is what I'm looking for. This is where the range I want to get in. This is the zone. Give me the full breakdown. This is why I want to enter here. Give me all your points of confluence. You should have like probably like 15, 20 different things. You can DM it to me or post it. Yeah, I mean, it's either one. Either one. Yeah, it's up to you, you know. Yeah, you can DM it to me. Exactly. 100%. That's the whole. This is the only homework. This is the only homework you've ever gotten in your life that will actually lead to you making serious cash. Yeah. For real. That's funny, man. That's hilarious. When you put it like that, it's hilarious. It's crazy how our education system just like sucks. It doesn't teach you how to make money. It teaches you how to be a slave. Anyways, that's a different conversation. But yeah, don't be afraid to make mistakes. Give me all your points of confluence. You should be giving me things like zone, point of control, signal, monthly order flow, weekly weekly signal, monthly zone, all that. Like that should all be in there. I'm looking for X to enter, yada 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 yada, and then draw it out and show me what you got. You guys have been in with me for a little while, so you have enough data and enough understanding that you should start developing these. You should start developing your trade plans so that way you can start you know at least start getting um, you know making the making your own ideas too, so that way when they show up live, it's not like a big surprise. You're like, oh yeah, I expected that to happen, you know, because the biggest thing that you guys are going to experience that is going to cause you cognitive dissonance is the type of entry that I put you in. Like notice the last SPY and Apple entry that I put you guys in. This is not like, look at this. This entry here is not emotionally satisfying entering at this stage. This is not this does not look like this trade is going to work. Okay? It looks terrible, if anything. But that's where I told you to get in. Same thing with SPY, right? When I told you guys to enter here, where is the damn thing? Here. After this disgusting chart printed, and I'm telling you guys to buy here, this does not look like a place to enter. In fact, it looks like it's going to continue to fall through the floor. But that is the exact spot where you needed to enter. Yeah, I would second that. I would. It's you know there's a thing about learning that I learned, and especially in the digital age. And I'll share this one little quick story with you guys. I had an English teacher that it was actually the best course that I ever it was the best course I ever taken in my life. It was an English course, but it caused me so much pain to learn it and do it correctly that I felt like I got the most growth from it because it was so difficult and I had to sit with those problems. And this is an English course, this is a writing course. And you would think, how the hell can a writing course be difficult? Man, if you would have seen these prompts that he was given, man, man. But it forced me to sit there and stick with a problem that was very, very difficult and you know, caused the brain to develop. And after I did that, it made me more enthusiastic to face more difficult issues, more difficult problems, having gone through that. So it definitely set the tone for what I learned in college, and when I was faced. You know what? I didn't, man. I didn't realize what I had at the time. I didn't realize that it had such a profound impact on me until years later. And that's like another like introspective. Yeah. That's actually a good idea. I'm gonna see if he's even, if I can I know his name. I know his full name. He's probably a lawyer by now because that's what he was training to do. See if I can find him. I'll try to do that. That's actually a great idea. Thanks for that. Yeah, I should do that. Yeah, man, because it really did. profound impact on me, and it just really, oof, man. It was, oh, it was, dude. I mean, you got to think. We're getting like English prompts from somebody who's like pre-law, and my God, man, it just, he would give us like a 2-paragraph thing that we needed to decipher, and it was like every other word I was going to the dictionary to figure out what the damn thing even meant. And then it's like, then take all those words and put them in one sentence and what they all mean together. Bro, it was insane, man. It was insane. I took it with Cheyenne, actually, my cousin, and we were both cursing and screaming like at these prompts because it was so freaking difficult. It was so hard. Like it was, dude. I took high level calculus, applied calculus. That was nothing compared to this English 101 course I took. It was nothing. Applied calculus was a walk in the park. I swear to God. I swear to you. I'm telling you. I'm telling you. I'm telling you. And that is a bold, like, just to give you an understanding of how difficult this was. Like, this, it was insane. It was insane. Yeah. And, you know, and this, yeah, it's like, yeah. 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 I mean, no, I am better with numbers for sure. Yeah, I had no problem with calculus. Yeah, numbers is my thing, but obviously. But yeah, it's yeah, man. Anyways, I think in the modern day though, we lose a lot of that because we have all these electronic tools that take away that learning from us. We don't get to we don't get to have that experience of difficult difficulty learning something because it can just you can just put a prompt in or put it in like, oh yeah, just write this up, write this essay, boom, done, you know. But when you have to like sit with a problem and learn it, it just, I feel like, not I feel like, I know that it causes that you know, neuroplasticity to, you know, and just the brain to actually grow and expand beyond what it currently is, which I enjoy. I like things that are difficult. Anyway, it's just some thoughts there. Yeah. I just wanted to share it. Yeah, it was yeah, it made me sit with difficult problems is what it did. It taught me how to sit with difficult problems until I figured the damn thing out. And that's really that's I feel like that does a lot for you in just overall. Yeah, like a man. Yeah, it's time for me. I'm gonna get some food too. Yeah, done. I'll go this week. Yeah, I'm gonna cut the video now. I'll upload it.